Today, we're going to be playing Big Money Bingo, and we're going to be watching and learning from Kristen Quilimaggi, a multi-millionaire stock trader, discloses his winning strategy. Now, as we go, I want you to tell me in the chat if you see anything light up here on Big Money Bingo, and you can tell me like B3, and I'll go and put a space on B3. I'll put a dot on B3. And don't forget, you can actually win a $10 Amazon gift card if you're playing this live with us, but you have to type in hashtag outlier to be in the drawing. So let's learn from Kristen Quilimaggi.
Trading strategy and concepts from the Swedish swing trader Kristen Quilimaggi. Kristen is a self-funded independent trader who has amassed tens of millions through his breakout strategy.
Oh, I already saw one. I already saw one. Here we go. Breakout, baby. Let's go. So here's the deal, right? We can look at this from the mindset of we can learn so much from these people who have already found success in the market, right? But you need to be paying attention. It's one thing to hear it. Let's let it go one in ear and out the other ear, but it's important to learn as we go. So please tell me in the chat as we go if you see anything.
To measure the magnitude of Kristian's success, we found that his trading account in 2013 stood at $9,100. By 2018, this grew to $1.4 million, and in July 20...
Good freaking Lord. Could you imagine 5 years going from 9,000 to 1.4 million? Right, that I think your wife would be very happy about that. I think your wife would be very happy about that. But hey, let me introduce myself real quick. My name is Christopher Ewell. That is not going to work. There we go. My name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. So go ahead and subscribe if you haven't already. Let's get back to bingo over here.
2019, it grew further to $4 million. As of March 2021, Kristian's account stood at $82 million, an astonishing...
Goodness. Look at this. In less than 10 years? Wow. Dude, that's sick. Now, here's the deal. These are the kind of people you want to learn from. These are the kind of people you want to learn from, right? Jeez, yeah. Launchpad says he must be an outlier.
Astonishing achievement by anyone's standard. Today, we look at his specific setup criteria and concept. If you find value, please hit the like button and consider subscribing. Like most of us, Kristian's path was far from plain sailing. He started in 2011 as a day trader and managed to blow up his trading accounts on 4 occasions during the first 2 years.
Wow. Okay. Here's the deal. I've told you all before, I've blown up my account twice. This is so common, so incredibly common. Don't feel like if you've blown up your account that it's over. In fact, consider it a rite of passage. And also think of it this way, right? A doctor doesn't immediately go into open heart surgery in the first month of being a doctor, right? No, of course not. The doctor is going to go to medical school for years and years, and then residency for years and years, and then is going to be going into open heart surgery. And this could take decades, right? So if you are trying to start trading and immediately profitable, I got news for you. It's just the likelihood of that is next to zero. Like I said, I've blown up my account twice. The stats are 90% of traders blow up 90% of their accounts in the first 90 days of trading. So if that's happened to you, don't feel discouraged. Just know that I've done it. Kristen Quilimaggi's done it. And both of us have made tons of money in the market since that point. Since that point. Don't be discouraged. You can do this.
He later moved away from the lower timeframes and viewed the action from further out to become a swing trader. Kristian said, I started moving away from day trading to swing trading since I realized the potential is so much bigger there.
Swing trading is also what I do, right? Swing trading, meaning you're not looking at it on an intraday time frame. An intraday time frame is just noise. Some people do swing trading on weekly charts. Some people do it on daily charts, probably not monthly charts. That would be more like a long-term investor. But swing trading to me means anywhere from 1 day to 3 weeks, 1 day to 1 month, somewhere in that time frame, holding a trade overnight versus anywhere from overnight into 1 month, right? Anywhere in that time frame to me is swing trading. What is it to you? Tell me in the chat. I'd actually like to hear. Oh, wait a minute. Michael says, hey, I'm a doctor and I still blew up my account before I saw the videos. Oh, before I saw you saw our videos? Oh my goodness. Thanks, Michael. I appreciate that. Surely that's a B1 swing trading. Let's just follow the trend. No. I'm not giving you that one yet. We'll see.
Before we look at the strategy which has netted Kristian a fortune, let's first determine what he says about position sizing and risk.
Up risk. Here, let's see if he talks about reducing risk.
Christian says that you should never have more than 30% of a position held overnight, suggesting that his position sizes fall between 10 and 20% of account size.
Look at that. That's not too far different from mine. Now, let's do a little bit of math here real quick. Let me pull up our position sizing spreadsheet. I'm gonna have to make this bigger to make it work correctly. So let's say that you have a $100,000 account balance. Okay, just for examples. And let's say you want to risk 5% per trade. Okay, risk is not the same as portfolio size. Let's see what I mean by that. If I wanted to be in Palantir, I could own 389 shares, and the difference from the current price to the half ATR exit price would be equivalent to just $1,250, which by design is less than the 5% of risk. However, the portfolio size would be 51%. That's a huge position size, But let's say the option you bought is $10. That would only be 4% of your portfolio size. Okay. Risk means how much you're willing to lose. Portfolio size means how much of your account you have to put into the trade to find out if it's going to work. Now, I prefer options because you can put in 4% of your portfolio using options versus 51% of your portfolio in stock, and you're going to have nearly the same outcome. It's such a hack, such a cool hack. But Kristen Quillamaggi looks like he does 10 to 25 or 10 to 20% in portfolio size. Okay, portfolio size, not risk size.
And his risk per position ranges from 0.25 to 1%.
Oh, look at that! Talking about risk, 1.25 to 1%. How about that? Look at that! We're learning so much as we go.
Therefore, if we assume an account size of $100,000, the position size would be between $10,000 and $20,000, and the risk per position would be between $250 and $1,000.
Now, here's the deal. How many of you actually trading a $100,000 account are willing to put a trade on where you only lose 1,000? Probably not very many, right? I would bet if you had a $100,000 account, you're probably like, well, I mean, I could lose a few thousand. It's fine. Here's the thing. This is super common. I have so much money in my account. People think like this. I have so much money in my account. It's okay if I lose a few dollars. It's okay if I lose a few trades. I'll make it up later. I have so much money that allows me to be more risky. That allows me to be reckless in my trading account. I'm here to tell you this, right? Do not, under any circumstance, think that because you have more money in your account means you can be more reckless in your account. No way. No way. Jonathan says G5. Reduce risk. I'm good for that. I'm good for reducing risk. I can live with that one. Let's go. Boom.
Christian does, however, point out that when his account was less than a few $1,000,000, he used a slightly higher risk of between 0.5 and 1.5% risk per position, a risk percentage I tend to use myself. Alluding to it,
which is not, sounds crazy, not too dissimilar from what Chris puts in for total risk. Wow. Oh my gosh. It's like Chris knows what he's talking about. Even though he's just a random guy on the internet, right? The math behind this still ekes out to roughly between these 2 points here on the actual risk to your position. It's amazing.
To his failures in the early years, Christian said, at the very beginning I risked more still, but honestly I didn't have a great grasp of the concept of risk and position sizing. Now let's look at the setup he uses. The breakout
in the chat, be sure to tell me if you see something come through, okay?
Trade is Christian's preferred strategy, and he lays the foundation for his approach by saying, if you study thousands of the biggest winning stocks over the past 100 years, they tend to move in stair steps, meaning they will make a 20 to 50% plus move, pull back and go sideways for a while, and then make another move. Christian uses the daily chart, initially looking for a big move within the last 12 weeks, ideally moving between 30 and 100%. The next step is to look for an orderly pullback into a consolidation, and the consolidation can run between 2 and 8 weeks. During the consolidation, the price surfs a rising 10 and 20-day moving average.
Okay, it's about to get real good in here. Here we go. Moving averages. There we go. By the way, do me a favor in the chat. Tell me the 3 moving averages we use to determine the outlier trend template. Tell me in the chat the 3 moving averages we use to determine the outlier trend template. All right. Kevin says we saw a B5 market cycle. I didn't see a B5 yet. Jonathan says G4 entry signal. Did he say entry signal? I don't know if he said entry signal. 10 over 20, price over 50. 10 over the 20, price over the 50. Exactly. Guess what he's about to say? Just make a quick guess about what he's about to say. I don't know what he's about to say, but I have a pretty good idea what he's about to say. What do you think he's about to say?
With the 50-day moving average not too far behind.
No freaking
Christian's
way.
advice.
No freaking way. It's almost like Chris knows what he's talking about. Who would have thought? Who would have thought? Isn't that cool? Isn't that cool though? Right? Like Chris doesn't just make this stuff up in a vacuum. The reason that I'm not surprised to see the 10 over 20 price over 50 right here is because that is a timeless principle that works across all time frames. Every minute chart, every monthly chart, every daily chart, every weekly chart. The 10 over 20 price over the 50 is a 100% confirmation signal that it's the trend is bullish. Wait, Chris equals Chris?
Is to enter the long trade as the stock starts to break out of its consolidation.
I heard breakout. I heard breakout. I know that's on here. I typed it earlier. Wait, where's breakout? Oh, we already got breakout. Never mind.
He uses the low of the day as the stop loss position, also considering the range of price movements to ensure the risk-reward metrics remain sensible. For example, if the average true range of a stock is 5%, then the stop loss should never be greater than 5%.
No way. He talks about ATRs? Oh my gosh.
In terms of managing the trade thereafter, Christian suggests
G1, use a stop loss. Yes. Thank you. Thank you. Good job, guys. I didn't hear that one. Good job.
Selling between 1/3 and 1/2 of the stock between 3 and 5 days after entry, and then move the stop to break even. The remainder of the position should then have a trailing stop governed by the 10 or 20-day moving average, depending on how fast the stock moves. The trade would be closed if the price closed under the moving average.
Exit signal. Right? Don't do anything. And this is the hard part of trading. Don't do anything until you get your exit signal. Don't do anything. Oh, Michael says, you're probably saving so much money, by the way, since I started to earn a lot, and now I can actually make it work for me, a lot less risk following the plan. Wait a minute. Michael, did you just say that I help you save time, make money, and start winning with less risk? You know what? That's so crazy. That's almost like that's what our goal here at Outlier is to do, is to help everybody save time, make money, and start winning with less risk. Outstanding. Hey, I don't know if you guys know this, but you can actually pick up the annual pass. I got to find my little slide for it. My itty bitty baby slide over here. There we go. Now I can actually see it. You can actually pick up the annual pass for just there we go, 82 cents a day. Right? That's 64% off the regular monthly price. And now you can sit back and relax because you just found the easiest way to save time, make money, and start winning with less risk. Man, I am so glad to hear that from you, Michael. I appreciate you. You guys are so much fun to play these games with. I want you to know that. Like, it gives me such joy to do this with you guys. All right, let's get back to the video.
That is the concept behind Christian's approach. But before we move on to some of his real chart examples, I would like to take the opportunity to say a huge thank you to those that have subscribed to the channel. Today we reached the 50,000 subscriber milestone.
Bro, come on. Now he's at 263,000. I need you to do me a favor. My personal channel is close to 30. We're closing in on 30,000. If I have helped you in any way, do me a favor and just tell somebody else, right? I give so much content away for free on YouTube. Like, I really, really want to do everything I possibly can to help you save time, make money, and start winning with less risk. And if I have in any way, do me a favor and tell everybody you know, because I want to beat his numbers. I want to beat his numbers so bad.
And thank you to everyone for their support. Christian says, I'm a swing trader and use the daily chart to find these setups, but these setups also work on the weekly chart and the intraday charts. I
wonder why, because they're timeless principles.
To agree with this statement, and I use a very similar concept in our group using the weekly chart. Ultimately, the fundamental concept regardless of time frame is to achieve minimal risk with maximum reward.
Let's go. Reduce risk. Okay, we already talked about that. This is exactly what I'm talking about here, right? How little risk do I need to take to find out if the trade is going to work? How little risk do I have to take to find out if the trade is going to work? Where so many people say, in fact, that really is the difference between a pro trader and everybody else, right? It's like, how much risk how much risk can I take to find out if I'm going to be right? Versus, I wonder how much money I can make. Do you see the difference there? How much risk am I willing to take to find out if I'm right versus how much money can I make? How much am I willing to lose to see if this trade's going to work versus what color is my Lambo going to be? You have to take the risk first mentality in order to stay in the game.
A concept which is so important. Let's look at Christian's concept in practice. We are provided with a daily chart of Axon Enterprise. By using his checklist, we look for the initial price increase of between 30 and 100%. And in this...
Right, so it's already got momentum. It's already got momentum. I'll give you that. He's buying a stock that's already strong because the way you're successful in trading is to buy a stock that is buy high and sell higher. I know that that's not what we're told. I know that. But you have to buy high and sell higher. Because look, this move up here, buy it high and then sell it higher. Okay? And look at the momentum behind this. This is what you're looking for. This is the slingshot setup right here. Guaranteed he had everything set up in OVTLYR 9. Every bit of OVTLYR 9 was set up because 40% of the move is due to the market, 30% of the move is due to the sector, and the last 30% is due to the stock itself. And that's when you see moves like this. Now you have to sit and you have to wait. It's really hard, but you have to sit and wait for these to line up like that.
In this instance, price increased closer to the 100% mark. Next is the orderly pullback of consolidation, which we see.
Hold on, I see some bingos. Falcon says 01. High probability. Did he say? I believe he did say high probability setup. That sounds like something he would have said here. I'm good for that. Bjorn says into trade with the trend. Yeah, I like that. Look at this. We're catching up on bingos quickly. All right. All right. B1, follow the trend. Oh, wait a minute. We got to change one of these. Trade with the trend, follow the trend. I like follow the trend. I'll give you that one. Let's change this one real quick. What do y'all want to put in here? Do me a favor in the chat. We're going to rename this one, but I want you in the chat to help me come up with it. In fact, let me mark this one so I don't forget which one it was. Okay. We're going to change this one, but you tell me in the chat what we want to change it to.
See here. The consolidation falls within the 2 to 8 week duration, with this example lasting around 3 weeks. Next, we need to see support from the moving averages, and again here we can see the price being respectful of the yellow 20-day moving average throughout, not forgetting the trailing support of the 50-day moving average.
And 2050, baby. Let's go. I already have a follow the plan, skinny buff guy. Breakout. No, we already got breakout. Buy OVTLYR. That's a good one. Change to 10, 20, 50. No, I mean, it's rare that you hear that. Ride the trend, fundamentals. Let's keep going.
Next, we see the breakout. Once again, in this example, we can see the breakout, but instead of waiting for the candle to complete, which is my preference, Christian suggests entering the trade as it breaks out of the consolidation period.
Okay, this is a real note, right? So if this is his entry signal, right, this blue line, what he will do is buy it as it's breaking over that blue line anytime during the day. For me, I like the end of day closing. Like I want to see it happen at the end of the day versus having to stop what I'm doing midday and do this. All right, let's do no mo FOMO. Y'all are liking that. Or don't buy the dip. I kind of like don't buy the dip. In fact, I meant to put don't buy the dip on this and I completely forgot. So that's what it's going to be. Kevin, you win, my friend. Kevin gets gold star. Thank you, Kevin. Appreciate you, my friend.
The stop placement is underneath the low of that day at that moment. Once we have all setup criteria checked, we move on to the management of the trade.
Hold on, that's his entry signal. I missed that one. That was his entry signal. Boom. All right, we're doing pretty good.
Remember, Christian says he likes to sell either a half or a third of his initial position 3 to 5 days into the trade and then move the stop to break even.
Look at this. Okay, so he takes half or a third off the table right here. Now, if dude used options and he gets a move like this, he could have rolled up the option. And now here's the amazing thing about options, right? When you roll it, you can take partial profits now, which is what he's doing. You can free up capital now, which is what he's doing, and you can keep the trade alive, which is what he's doing. But I still have a full size position, and he's taken off half to a third. Isn't that cool? Isn't that cool? This is why I like to roll options, and this is why it's better than just selling half your stock.
The balance of the trade is then sold when the daily candle closes under the moving average line. In this example, we saw the yellow 20-day moving average as having the most merit, and we therefore sell the position here, at the close of the offending candle.
Right. Trailing stop, letting it work for you, not doing anything until you get your exit signal right here.
What I like most about these types of trades is the risk-reward element we mentioned. The rationale provides the logic for low risk, and the potential for high multiples of reward.
Exactly. And like Charlotte says, plus you get paid immediately. Immediately. G3 bingo. No way. Did he say that?
Christian says it's all about finding tight, high probability areas to enter so you
Did hear high probability right there.
You can have high risk-reward on your trades. Christian says he uses numerous popular trading setups, including his other favorite, the flag breakout. Named a flag because of its shape, and just as before, it's based on the same principle, a prolonged increase in price followed by a consolidation period. Christian then looks for the breakout, enters soon after the break, and places a stop accordingly. Summarizing the technical setups Christian looks for, he simply says it's pretty much flat channels, symmetrical and descending triangles. Before moving on, if you do find value in any...
So this is, I can't do patterns, right? I can do moving averages all day, right? On every stock out there. And that's easy for me because it's not subjective, right? It's just math based. However, let's say that I applied this right here to HIMS, right? I personally struggle with this. Let's go with Ray. So if you're connecting a couple points right here, right? If I did it like this, why wouldn't I do it like this, right? These would give me two very different outcomes here. And then if I did another one like this, what does that tell me? Or if I did another one like this, right? Okay, cool. But what does that mean? What does that mean? Right? I mean, in one theory, I could try and get it to a triangle over here. I could try and get it to a triangle over here, or with 4 drawings, or I could just let the moving averages tell me which direction they're going, right? When the 10 is over the 20 and price is over the 50, we know for sure that that is a bullish trend. No doubt. Oh yeah, Launchpad McQuack says math is math. The upside down monkey. No, what I like to say on these as a joke is the upside down triangle cheesecake bull flag pennant, because I don't get it. And that's okay. Everybody is going to have a different style of trading, which is why I always say, you know, you need to follow your plan. You need to follow your plan. You need to create your plan and follow that. And I'll give you that space.
Any of my videos, please do consider hitting the like button or consider subscribing. It really does help the channel. Christian provides an example of a flag trade he took in May 2020 against the popular stock Tesla. As with many chart patterns, there are elements of subjectivity, but we can see here.
Yep, just what I was saying. Elements of subjectivity. However, if you use moving averages, it's just math.
How we get the rise in price, which is soon followed by the consolidation, and this forms the flag, or arguably an ascending triangle. Christian would have entered somewhere here at the break, and soon after watched the price rise considerably whilst respecting the 20-day moving average along the way.
Exactly. Buy high and selling higher, right? If you're trying to do that on its way down, the problem is that you don't know how far down it's going to go. But if you're buying it high and selling it higher, it's harder to do. It sounds way better to buy it as prices are going down so you can get a better deal. But you don't know if it's going to stop here or here or here or here. But you can tell one thing. When you're buying it with the trend, when it's moving in your direction, you're going to get paid a hell of a lot sooner.
Again, the concept remains minimal risk and maximum reward. Christian says it's all about making 5 to 20 plus times your initial risk. You can be wildly profitable with having just a 25 to 30% win rate. It's all about having small losses and big winners.
There you go. Add to winners, cut your losses. Both of those right there. Oh man, we are close. I'm not going to let my winners run just yet. I got to keep y'all going. I got to keep the watch time up.
Although we don't know Christian's exact exit point on this trade, we can comfortably say that he achieved at least a 20-to-1 risk-reward ratio based on the moving averages. A very good trade indeed. It's fair to say Christian's primary focus is on money management and the concept of risk and reward. The setups themselves are secondary and not groundbreaking. In fact, Christian says a lot of great traders trade the same setups because they work and have done for 100 years.
Timeless principles. Timeless principles I talk about all the time.
Fundamentally, trading is a numbers game, a game of odds, and the more that we can move the odds in our favour, the more margin of error we can absorb, and this is where risk-reward becomes the major factor. Let's look at how risk-reward and the margin of error have an important correlation. Christian suggests his win rate is 30%, meaning 7 of his trades will be losers and 3 will be winners, often.
Now, when you see that on the outset, you're like, man, this guy's a loser, right? When you see this on the outset, this guy seems like a loser, right? Because how can you call yourself a consistent, amazing, profitable trader if you're losing 7 out of 10 trades? You must suck at trading. I'm telling you, oh my gosh. I remember seeing some comments way back when, because I get all the comments, right? I see all the comments. I remember getting comments way back when I was talking about how profitable I was. And they're like, oh yeah, well, what's your win rate? Does it matter? Who gives two flying monkey donkeys if you have a 58% win rate or a 88% win rate? I have had 84% win rates and lost my ass in my account. I've had 58% win rates and nearly doubled my account in the same year. The difference is how big the winners are versus how small the losers are. Okay, it's not going to work if your losses are big and your wins are small, no matter how great your win rate is. It's just not going to happen. But if you keep your losses small and let your winners be big, and you combine that with a high win rate, you can make unbelievable amounts of money. Tremendous amounts of money.
Coming in clusters. From what we know already, let's assume Christian's loss for each of his losing trades is 1% of equity, and the gains for winning his trades are 10% of equity. We can calculate that he lost 7% but gained 30%, equating.
Pretty sweet. That's a pretty sweet deal right there, right? Now, he's not losing these on purpose. What he's doing is taking educated guesses, following his setups, and he's saying, I will give it this much, I will give it 1% of my account to find out if I'm right. If I'm not, that's fine. I still have 99%. I'll give it 1% of my account to find out if I'm right. I'll give it 1% of my account to find out if I'm right. Right. And this cycle repeats over and over and over. And here's the other thing, too, is like the distribution of these, we have no idea. He could actually have 10 winning trades in a row, followed by 70 losing trades in a row, or whatever that would be, right? To get to 100%. If he had 10, 30%, let's say he had 30 wins in a row and then 70 losses in a row. That's still a 30% win rate. That's still a 30% win rate to get 70 losses in a row, yet be exceptionally profitable because the winners were 10 times bigger. Or what is this? Let's say 3. Let's call it 4 times bigger.
To a 23% profit overall. Such an approach provides considerable margin for error. For example, let's assume Christian's batch of trades only had a win rate of 10%, meaning he had 9 losing trades and 1 winning trade. We now have lost.
There are people on the internet that would tell you that you suck at trading. You have no idea what you're doing, yet you can still be profitable. So don't let people tell you, don't let the naysayers get you. And another thing too is, right, I mean, I heard this phrase before, and it's like, get in the lab and don't tell anybody what you're doing. Right? Go in the laboratory and get busy. Then on the other side of it, tell how you did. Success is the greatest revenge by far. But if you're bragging to people, about how much money you're making, and you have a 10% win rate, it's not going to be, how should I say this? If you have a 10% win rate and you're still profitable, people will absolutely doubt everything that you've ever done ever and consider you a huge liar. Yet you can still be profitable, which is why I say get in the lab. Don't tell anybody what you're doing. That's none of their business anyway.
Losses equating to 9% and a winning trade equaling 10%, providing an overall profit of 1%. Therefore, even underperformance can be profitable. The key is keeping losses small and allowing the winning trades to run. Now,
okay, there it is. Let your winners run. That is a bingo right there, my friends. We did it. We got a bingo. Congratulations to everybody. Bingo, baby. Bingo, baby. Let's go. Was that a double bingo? Oh, snap. A double bingo. Oh, man. I guess I'll have to give away 2 Amazon gift cards today. Let's go. Let's go. All right. We're going to give away 2 Amazon gift cards today, but only if you put hashtag outlier in the chat. You're not going to win it if you don't. I'm just putting that out there. Let's finish this video and we'll draw some winners.
Now let's look at a strategy which also relies on the same 30% win rate, but has a lower risk reward. For example, we risk the same 1% on the losing trades, but target 4% on the winning trades. This would provide a 5% profit overall. The problem, however, with a lower reward is that the margin for error is far less. Just like we did previously, if we hit a longer losing streak, again providing a 10% win rate, the strategy loses its margin for error and returns a loss. The message here is not just about the overall return, but how an improved risk-reward ratio allows for the accommodation of more losing trades. Christian says, "My trading journal at times is mostly a sea of red, and then there is a big winner here and there. This is what trading is all about. You can be wrong 8 out of 10 times and still make money."
But even though he says mostly a sea of red and a big winner every once in a while, he's not holding on to those losers. I've told you this before, and I mean this. If you log into your account and you see loser, 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 winner, loser, 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 winner, you're doing it wrong. It should only be winners in there. And that's what I'm saying here is, and he's saying it too, is that if he has a losing trade, he bounces it. He doesn't keep it. He doesn't wait and hope and pray that it comes back. He says, okay, I acknowledge the fact that this trade didn't work out. That's fine. I need to get rid of it so it doesn't work against the winning trade. And I will continue to hold that winning trade forever. So in reality, he probably logs into his account, sees 8 out of 10 winners that have been there for a long time, sees a loser, says, okay, it's hit my 1% stop. I got to go. And then it's out.
Overall, I like Christian's approach, and much of it resonates with my philosophy. It's all about risk-reward and using a particular chart pattern to provide rationale for improved probability. Thanks for watching. And as always, if you found value, please hit
Pretty cool. And you know what? Rick is very right too. If he added the market cycle, then he probably would have a higher win rate. Right now, market cycle, meaning what we talked about earlier, that 40% of the market's move is due to, or 40% of your stock's move is due to the market. 30% is due to the sector, and the last 30% due to the stock itself. That's what we call the slingshot setup. So if you put all that together using the outlier 9, you put all that together, your win rate should increase tremendously. Should is a bad word. Should is a dirty word, but I can't specifically say that your win rate will increase, right? I can't do that, but I can give away some money. So last chance, if you haven't put hashtag outlier in the chat, we're about to give away 2 $10 Amazon gift cards. But don't forget, only if you want to save time, make money, and start winning with less risk. Okay, only if you want to do that. So let's go. 3, 2, 1, go. First winner is going to be. I know I can't say should in particular, right? I gotta cover my bases slightly. David George, congrats, David. Congrats to David George. All right, I got to write these down so our support team knows. By the way, do not catfish as David George. If people start catfishing, the games are over. You understand that, right? Like, I'm having to talk to you like a dad right now. If you and your friends try to catfish us, the games stop. Nobody has any more fun. All right, but let's let the game continue on. Congratulations, David. There he is. Dang, let's go. Wait a minute. I saw him. There he is. Wait, where did he go? There he is. David George. Congratulations, David. All right, next draw again. The winner of the second Amazon gift card today, brought to you by OVTLYR.com, is Albertone. Congratulations, Albertone. Albertone is one of our longtime outliers and helps us out with so much stuff. Congratulations, Albertone. Congrats to Albertone. Oh, I think I spelled that wrong. My bad. Yeah. What is catfishing? The impersonating David or Albertone, because what I need David and Albertone to do is shoot us an email with your name and your email address. That way we can shoot you a $10 Amazon gift card. That's what I want to do. That's what I want to do. All right. It is so great to be able to hang out with you guys every day. And look, we learned so much from Kristen Quillamanti right here. But you can also save time, make money, and start winning with less risk by clicking one of these 2 videos. And have a fantastic afternoon. We'll talk soon.